Hey, what's going on, everyone, and welcome back to another video. My name is Vijay Patel, and I am your 1099 tax coach. Today's topic is Trump accounts. What 1099 workers need to know about them. In today's video, we'll take a look at what Trump accounts are, how the contributions and distribution work from that Trump account, how to go about opening one, and at the end, we'll cover a specific way where certain 1099 employees can take advantage of a specific tax strategy to get the deduction on part of their contribution, as well as really supercharge the Trump account for their kids. But before we dive in, and as always, although I'm a CPA, I'm not your CPA, and I'm not aware of your specific tax situation. So this is not a specific tax advice to you or anybody watching that video, and you should really consult with your own professional before acting on information presented in this video. So with that out of the way, let's dive in. So what is Trump account? Trump account is a brand new tax advantage savings account, and it was created by the One Big Beautiful Bill Act that was passed in 2025. Any child who is under the age of 18 is a U.S. citizen and has a valid social security number is eligible for a Trump account. Um, any parent, grandparent, relative, or anybody else for that matter can contribute up to $5,000 in a child's Trump account. Keep in mind there can be only one Trump account per child, so maximum contribution a child can have for the Trump account is $5,000 for a year. Now, kids born between 2025 and 2028, so within those 4 years, um, the government will invest $1,000 and really jumpstart the investment um, uh, in the Trump account. Um, Now, as I discussed, that you can contribute up to $5,000 a year in a child's Trump account, uh, but until the child turns 18, these monies are locked in, meaning you cannot withdraw it for any reason. Once the child turns 18, actually, January 1st of the year, when the child turns 18, the money gets freed and can be withdrawn. Um, when you withdraw the money, um, the rules work more or less similar to traditional IRAs, and there are early withdrawal penalties unless certain conditions are met. But when you take the money out, not your entire contribution is taxable income. Uh, there are two components of the withdrawals. One is the original contributions that has been made, and the second component is the growth on that money over the years. So only the growth on that money is taxable, and not the entire distribution from the Trump account. Now, only withdrawals until the person who's the beneficiary of the Trump account is 59 and a half. It's subject to the 10% penalty, just like a traditional IRA withdrawals work, unless the withdrawals are for one of these specific purposes, such as education or medical, or if the beneficiary is using the money to buy their home. Uh, Now, in order to open a Trump account, a Form 4547 has to be filed on behalf of the beneficiary, on behalf of the child, with the IRS, and the IRS will process that form and will send the further information about activating and then start contributing money into the Trump account for their child. Now, at the end, let's take a look at the way 1099 workers who are taxed at either S corporation or C corporation and are the only employee of that corporation can really take advantage and supercharge their Trump account. So they can contribute 5,000 individually. They can contribute $5,000 a year into their child's Trump account, but they can establish a benefit plan, just like a 401k plan or any other benefit plan. They can establish a benefit plan for the business where the business can contribute up to $2,500 into the child's Trump account on top of the 5,000 that the parents have contributed. So now the total contribution is $7,500 into the child's Trump account. On top of that, the $2,500 contribution that the business makes is a tax deduction. The original $5,000 deduction is not tax deduction. It is after tax dollar contribution, meaning there's no tax break for contributing money into the child's Trump account. But if a business establishes a plan and contributes money as per that plan, then that contribution will be tax-free. But if you are the sole owner employee of your corporation, then this is definitely a no-brainer. You can contribute additional money on top of the personal contribution, get the tax break, and supercharge the Trump account contribution for your child and help them out in their future needs. Um, so I hope that that information was useful. If you have any questions, you can feel free to reach out to me. My email address is on your screen, and I'll be happy to answer any questions you may have. And before I go, last thing as always, if you find the information in this video helpful, don't forget to like it, subscribe to my channel, and share with somebody who can also benefit from this information. So that's all for today. Until next time, take care and bye bye.